The China and Africa podcast is brought to you in partnership with the Africa-China Reporting Project at Wits University in Johannesburg. The ACRP promotes balanced, considered reporting on Africa-China relations through innovative training programs held throughout the year. More information at africachinareporting.co.za.
Hello and welcome to another edition of the China in Africa podcast, a proud member of the Sinica Network from SupChina. I'm Eric Olander, and as always, I'm joined by Cobus van Staden, the senior China-Africa researcher at the South African Institute of International Affairs in Johannesburg, South Africa. A very good morning to you, Cobus.
Good morning.
Cobus, over the past couple of weeks, we've done shows trying to understand what China's doing in different parts of the world. A couple of weeks ago, we focused on Venezuela and Chinese debt there. Last week, we talked about the China-Laos railway and also the debt for equity swaps that are happening in Laos, trying to get a sense of what the Chinese are going to do in Africa amid all of this change that's been going on, not just because of COVID-19, but also because of debt, the U.S.-China conflict, and so much. So today, we're going to pull out the focus even broader, and we're going to look at the Belt and Road writ large. Now, the problem with looking at the Belt and Road is actually trying to define what exactly is the Belt and Road. And it's really one of these kind of Rorschach tests where you can see anything that you want into it. And more now in places like Europe and the United States, people are seeing it as a kind of an imperial agenda, a very aggressive agenda. It's becoming more militarized, weaponized. These are words that you hear associated with it. In China, people talk about it's the expansion of trade routes. It's connecting the world with China. It's integration. It's multilateral. So again, it can be anything that you want. Cobus, what you think right now, based on what we've seen, what's your assessment of the Belt and Road today?
Such a difficult question. It's, I think it's really eye-catching in terms of scope, of course. I think, in a lot of ways, Africa still feels a little bit remote from the Belt and Road, not because Africa isn't engaged in it, kind of many African countries are signatories, but because a lot of what is done in the Belt and Road, the kind of rollout of infrastructure, actually started happening in Africa thanks to Chinese money before the Belt and Road was an official entity. And then we saw retroactively a lot of African projects kind of got pulled into the Belt and Road label, kind of after they started as just kind of China-Africa projects. So it is this kind of very interesting and also quite vague kind of initiative. I can see why it makes Western countries nervous, but at the moment, I think African countries remain relatively optimistic about it. But we will definitely see, kind of like how it will shake out after COVID, I think remains the big question.
So a lot of people try to understand the Belt and Road in terms of shipping, whatnot, and that is ports and railroads and things like that. But there's many parts to it. So there is the traditional Belt and Road. Of course, we've heard about this in Djibouti and Kenya. There's also the digital Silk Road, which is also related to Djibouti. And there's a part of that, which is this cable that's going undersea. And we're going to talk a little bit more about that, coming from Asia all the way to Africa. There's a space Belt and Road. They now have a health Belt and Road. So it's operating at various levels. Now, for a lot of people, when you hear the discussion in places like Washington, they talk about the Belt and Road in a very forward-looking future tense. The reality is that a lot of it's been built, and you can actually see it. And that's why it's really interesting to be able to see what's on the ground and really happening versus, say, what's theoretical and what will happen. So there's a new book that's out, The Emperor's New Road, China and the Project of the Century. It's written by Jonathan Hillman, who's a senior fellow at the economics program and a director of the Reconnecting Asia Project at the Center for Strategic and International Studies in Washington, D.C. And we're thrilled to have Jonathan join us on the program for the very first time. A very good morning to you, Jonathan.
Good morning. Thanks for having me.
Congratulations on the book. It's really a fun read, and it was not one of these books which is very academic. It felt a lot like part travelogue, part geopolitics, political science. I mean, you actually went to a lot of the places that you talked about. So you weren't just sitting in the corner office there in downtown Washington, D.C. writing about it, but you went to Djibouti, you went to Central Asia, also into South Asia, and then, of course, to Kenya as well. So you have a first-hand perspective of what the Belt and Road is from the ground level. And so let me ask the same question to you to start our conversation that I asked to Cobus, to help us give a definition to this thing that seems so hard to actually define.
Well, it is a great question, and I think the reason it is difficult, well, there are several reasons why it's difficult to answer that. One of which is that there's no criteria for what a Belt and Road project is. So without that official criteria, different interest groups have repackaged what it is they do as being part of the Belt and Road. And so there's been, I think, there's been a political incentive to leave it open-ended, to leave it vague like that. That's led to a lot of project activity in the earlier days, but it's also created some serious management challenges. The way that I think about this is that this is really Xi Jinping's signature foreign policy vision. It's tough to talk about it without acknowledging that, because that also, I think, has propelled it forward, made it difficult to cancel projects sometimes. And really, I think what ties together a lot of the various activities that are under this wide and ever-expanding banner or brand is that they're focused on connectivity, focused on putting China closer toward the center of nearly everything, whether that's transportation, people-to-people ties, investment, or information flows. And so this is really a vision for global connectivity with China at the center of it.
You mentioned in the book that as Eric also mentioned, that everyone essentially is seeing the Belt and Road in different ways. And Western countries are taking a very alarmist kind of view of it. Do you feel that level of alarm is justified?
So I think when I started looking at this, I'm a former U.S. government official, and I work at a think tank that studies foreign policy and national security issues, from an American perspective. And I think when I started looking at projects, I was very tempted to put projects into one of two categories. I wanted to say, either this project that I'm looking at must be driven by commercial motives, or it must be driven by strategic motives. There must be some ulterior design here. And the more projects I've looked at, the more complicated I've come to realize it is. There are projects that serve both of those aims. There are projects also, many of them, which serve neither of those aims. Projects that are really built because the interest groups building them want to build them, the politicians announcing them want to announce them, and they might not be either commercially viable or strategically that significant. And so I think there's this quite broad spectrum. You have to ultimately look at individual projects to help make sense of this. And I do think, as you're suggesting, that some of the anxiety about this set of activities is probably doesn't accord with really what's been delivered to date. Only a fraction of what's been announced has actually been delivered. And this is a really tough, especially when we're focusing about the infrastructure part of this, it's really tough business to deliver large infrastructure projects, even in the best business environments. And China has gone into some very difficult business environments.
But they're doing it. I mean, there is a railroad that you took in Kenya. There's a new railroad in Nigeria. There's ports in Djibouti. I mean, it's happening, right?
Yeah, it's happening. There are projects where, in some cases where there weren't projects. So those are sometimes the most difficult projects to examine, because the whole point of building in a place that hasn't been connected is to make it part of global networks in a way that it wasn't. It's to change, it's to change and attract activity. And so if you go in the early days, it's difficult sometimes to imagine how that's going to work. But there are also projects that have been built, that haven't been built at proper specifications, or rather than upgrading an existing railway, to build a new one running alongside of it. So I think there's, even in the projects that have been built, there's some evidence of excess, and I worry about that a little bit in terms of the commercial prospects of some of them in the longer run.
In your book, you make the point that in the first place you raise the issue of Chinese collaboration with Russia, and the central role of Russia in the larger success of the Belt and Road, and then you also say that at the moment you feel that the United States is essentially pushing Russia and China closer together rather than kind of like cannily working to try and kind of weaken the relationship between the two of them. What do you mean by that?
So, I think Russia, when you look at, you see these Belt and Road maps, which all of them, I think we should sort of read with some degree of skepticism, even the ones that my project at CSIS produces. But if you look at the map of the Eurasian supercontinent, where a lot of this activity is happening, and for China, really the prize at the end of the Eurasian supercontinent is the European market. And to get there by building transportation links and expanding into markets, you really need to go through areas where Russian influence, where Russia still matters. You need to go through the Russian-led Eurasian Economic Union. You often, you need to go through parts of Russia itself in some cases, depending on the routes. And so Russia is really the gatekeeper for China's overland ambitions, and it could really spoil the Belt and Road. I don't think any country is better positioned to be a spoiler. But I think Russia, not having as many options in its dealings with the West right now, understandably so, has been, it's been put into a position where it's looking more toward China to do business, to attract investment. And so I think that's why you've seen this embrace of the Belt and Road by Vladimir Putin. And a lot of discussion about linking the Belt and Road with the Russian-led Eurasian Economic Union. In the book, I talk about sort of why conceptually that seems like it could work, but in reality, it's probably pretty exaggerated, and there hasn't been too much evidence of cooperation on specific projects, or very limited evidence so far. So still a lot of barriers for them to do that linking. But in the meantime, the U.S. has been, in formal documents like its national security strategy, talks about Russia and China as if they're peers, which they're not, right? And it talks about them, I think, as if there's more cooperation there than there sometimes is. It depends on what dimension of that relationship you're looking at, but on the connectivity economic side, I see it as pretty limited to energy, dominated by energy, and the further you look at it, I think the more evidence you see of lingering mistrust, especially on the Russian side. And so I talk about that more in the book, and there's a project in particular that I think that illustrates that. So I think recognizing the divide that still exists in that relationship would be a smart basis for U.S. policy, rather than talking about it as if it's more unified than it actually is.
Let's step back a little bit and go to the beginning of the book when you open up and talking about the fact that what the Chinese are doing today really harkens back to a previous era of imperialism and global domination and hegemony. When you reference back to the British Empire and talking about how the fact that there is a sense of imperialism. Now, that's a word that I think would make most Chinese people recoil, and certainly the Chinese government, who are very proud of the fact that they will tell you repeatedly, we've never colonized another country, we've never conquered another country, we've never invaded another country. That being said, in places like Africa, the perception that China is a neo-colonial power, true or not, is nonetheless there. You use the phrase incremental imperialism, and you talk about how the Chinese are laying communication connections, much like the British did. You talk about how they're building ports, much like the British did. And the flag tends to follow trade. So militarism tends to follow expanded global trade. So there are some parallels to Britain's imperial era. Talk to us a little bit about how you see this in terms of incremental imperialism and what you meant by that.
So I agree. It is a term. Imperialism is a term that I think comes with so much. Rightfully so, comes with so much historical baggage, and so it feels loaded. It feels heavy. But I think and there are also different, there have been different forms of imperialism. And so, if you look at the Oxford English Dictionary, which, perhaps appropriately was created during the reign of Imperial Britain, it has a definition for imperialism that feels almost timeless. And I think it describes it as the extension and maintenance of a country's power or influence. And I think it says through trade, diplomacy, military or cultural dominance, et cetera. And so I think that, that definition, I think certainly applies to the Belt and Road. And the part of the definition, the et cetera part, I think is worth probing further as we think about how digital infrastructure might give China influence. But to me, the historical parallel, and I talk about this in the second chapter of the book, the historical era that comes to mind when we're looking at these activities right now isn't the Silk Road that's often promoted as being the image that we're supposed to think about with the Belt and Road. And it's also that's also usually a very romanticized version of the Silk Road, and Marco Polo and camel caravans, and an exchange of goods and ideas and mixing of cultures and all of that. The reality, life during that period was pretty tough. And to me, in economic terms, the Belt and Road is not going to bring about a shift of economic activity from the maritime domain into the overland domain in the way that overland trade was dominant during that initial Silk Road period. But there is a chapter of history, the period, especially the period leading up to World War I, where countries were competing for influence, building large projects beyond their borders. And I find a lot of interesting parallels in that set of activities, both in terms of the technology that was being used, deep sea ports, telegraph cables, railway connections, a lot of that being the predecessor to the types of projects that are being done now. And of that, one very interesting set of activities that you mentioned is what Britain referred to as its network of all red routes, which were telegraph cables that touched only Britain and its possessions in order to limit the ability of foreign countries to monitor British communications. And Britain also dominated a lot of the know-how and the equipment that was needed to lay and repair those cables. And all of that, it began really as a commercial competition, but all of that was very useful, very critical in the early days of World War I, when Britain was cutting enemy cables while continuing to maintain its own. So to me, that's, I hope that's not where we're headed, obviously. But it's, I think, a sort of closer comparison than the romanticized Silk Road era.
Together with all of this infrastructure provision comes the kind of expansion of Chinese companies out into the world, and then their interactions with all of these different governments that's commissioning some of this work. And with that comes corruption. And we've seen in Africa as the kind of discussion around Africa's debt crisis gets more and more heated, there's also a lot of discussion about the kind of the corruption involved in some of the decision making around some of these projects. And in your book, you make the statement that that corruption isn't a bug in the BRI; it's a feature of the BRI. Talk a little bit about how corruption works in the BRI context.
So I think the Belt and Road is definitely opaque by design. If you look at, I've spent now too much time looking for information on Chinese projects. But if you were to go to look at a project that's supported by the World Bank or the Asian Development Bank or another multilateral, you could see, all of the project details on their website very easily. In fact, the trouble might be there might be too much documentation there. You might be sort of swimming in documents, and it might take a long time to find exactly what it is that you're interested in. if you compare that to the difficulty sometimes in finding very basic information about projects that China's supporting, it's a night and day difference in terms of the level of transparency. And so Chinese officials say things like, Belt and Road is a sunshine initiative, but the reality is that it isn't. My job would be a lot easier if it was. And I think it's been done that way because, it benefits actors on both sides of a deal. Every deal, takes both sides to do a deal. Every project is a negotiation. And so some of the advantages of doing it in that more opaque manner are that you have less outside scrutiny. That often gives you the ability to move faster, to get things off the ground faster. That can be appealing if there's some kind of political timeline, like an upcoming election, or it can just be appealing because these projects take a long time, and you don't want to have to jump through as many hoops sometimes if you're building it or if you're having it built for you. And the danger in doing that, though, is that the checks that exist in places like the World Bank, which in some cases I do think that they've become perhaps too slow, perhaps too onerous, especially in a context now where there are these alternative opportunities. But the danger is that you're moving fast and not doing the risk assessment that you need to do up front, and pushing that risk further into the project cycle, and then inevitably, or unless you're very lucky, that's going to come back at some point. And so I think the downside of this is pushing a lot of risk further into the project cycle. The upside is that for China, a lot of the projects get started faster. And to be fair about this, corruption is not at all something that's unique to Belt and Road, but the Belt and Road's focus on large infrastructure projects, I think, accentuates corruption as a challenge, because large projects are almost tailor-made to have money siphoned off at various places, given the number of parties involved, given the ability to inflate prices for certain inputs. And that's a challenge worldwide, but it becomes even more a challenge in riskier business environments, and even more a challenge when there's a lack of transparency.
I'm glad you brought up the fact that this is not just a Chinese burden here, in part because we're seeing some new research coming out of aid data. Bradley Parks over there at William and Mary College, they just did a survey of 83 different loan contracts. And one of the clauses that they found in the contracts is very interesting here. Let me just read it. It says, "The borrower shall not disclose any information hereunder or in connection with this agreement to any third party," and here's the key part, "unless required by applicable law." And the way that aid data was phrasing that, which is a national legislature in any country can pass a law which says these contracts must be made transparent and everybody should be able to see it, which is why in Nigeria we actually get to see some of these contracts, but in other countries we don't. And so it really shows that the burden is on both sides here on the transparency side, and there is a loophole in these contracts according to what aid data is finding there. So I just think that's a very complex, interesting part of the dynamic. In terms of how the Chinese are doing things, and this is the concern that we see expressed certainly out of the United States, and we're starting to hear this more. Robert O'Brien, who's the National Security Advisor, he was participating in an online conference last week, and the word that he kept using to talk about the Chinese was dependence. This seems to be the new rhetoric coming out of the United States with vis-a-vis their concerns about the Chinese. And that was very interesting because when you were writing about how BRI is trying to, or the Chinese through BRI are trying to change the vocabulary of international relations, integrating words like sovereignty, win-win, non-interference into the global discourse, into the United Nations, into deals. Interestingly enough, Donald Trump himself has been bringing up the words like sovereignty quite a bit and playing right into a lot of what the Chinese are trying to do as well. But what about the rhetoric of the BRI and changing the language of it so it feeds into this notion that eventually dependence comes out of the rhetoric?
So I think the rhetoric, at least from the Chinese side, has been, I think you can see in some of the rhetorical shifts evidence of awareness about some of the challenges that the Belt and Road has faced. And so I think we have to keep in mind that the Belt and Road, as it was announced in 2013, is very different than the Belt and Road that existed in 2017 and in 2019. And indeed, after the pandemic, it will look different as well. But the rhetoric, especially at the second Belt and Road Forum, seemed to indicate that Chinese officials were aware that they were trying to push back on criticism of low environmental standards, corruption, lack of transparency, debt risks. And so you see that in the rhetoric, and you see some seriousness, at least in some of the documents that were issued at that forum. The framework for debt sustainability reads like it was written by the IMF. But the problem is that a lot of these things that are being pushed out, they're not binding for the countries who participate in the Belt and Road. The implementation is not transparent, so it's kind of impossible to know where it stands. And so I do think that there's been a series of rhetorical moves that highlight a level of awareness about challenges. I'm not sure yet that we've seen a lot of it translated into action, but I think it's something strategic that Chinese officials are doing when they talk about things like the importance of multilateralism, or when they talk about having new environmental targets. I think they're able to do that and face less scrutiny, in part because the United States has not been providing an authentic alternative, and so I think we really need to move beyond saying all of the things that we're against that China's doing, and speak more about the things that we support and what we're for.
Support for this podcast comes from the Africa-China Reporting Project at Wits University School of Journalism in Johannesburg. The ACRP provides reporting grants, workshops, and other professional development opportunities for both African and Chinese journalists. Follow the ACRP on Twitter at Wits China Africa, or visit africachinareporting.co.za for information about grants and upcoming seminars.
So, very basic question, but if, say the Belt and Road Initiative works incredibly well, like it works as well as Xi Jinping is, envisaging, what would that look like? Like, what would the world look like with a fully functioning Belt and Road Initiative, a few decades down the line?
So if this really worked in all of its, realized the full extent of its ambitions, I mean, you would be looking at, the return of the Middle Kingdom. You would be looking at a series of corridors going across the Eurasian supercontinent that, with China at the hub of it all. Yes, you would also be, on the ambition side, you would also be looking at, countries having projects, that work and that are supporting, the goals that they have. But I do think that they would be part of this structure, a hierarchy in which they would be subordinate to China. That seems to me what the maps look like, and what some of these ideas for these corridors look like. But I'm pretty skeptical that these ambitions are going to be delivered, anywhere near what they're described as. The corridors, I think, are a pretty convenient framing tool for giving some structure where there often isn't very much structure, and where activity has been a little bit more opportunistic and chaotic. So I think I'm struck more by the challenges that China would face, or continues to face, as it tries to realize those ambitions. Doesn't mean we shouldn't take what it says seriously, but let's also try to compare, the reality on the ground to what's said in these grand halls.
You have a great line in the book that in dealing with the Belt and Road, China is also dealing with countries that have been handling large powers for much longer than China has been a large power. And so which kind of lessons can kind of relatively small, relatively weak countries like countries in Africa take from China's more immediate neighbors in terms of how to handle the Belt and Road, in a way that doesn't ruin them and then gets them something in the end?
It's a great question, and I think that ultimately, at least in the short to medium term, that's where a lot of the solutions reside. It's in having countries be their own, best advocates, and some of that. It's things like greeting an unsolicited project proposal with a bit more skepticism than a project that has been on the top of your development strategy for some time. And frankly, having a development strategy is important, so that you don't have situations like Sri Lanka where you're building a port in the south with capacity that you don't need because you have an existing functioning port. I think having the technical capability to evaluate contracts very closely and to look at things like Eric mentioned the clause about not being able to disclose the contract terms unless required to by national law. If I was trying to negotiate that language, I would want the default to be that unless there's a national law that says I can't disclose it, that I should be able to disclose these. There are things like other clauses like what happens when there's a dispute, which is quite common in large projects. Chinese negotiators will try to have that clause say that the disputes need to be settled in courts in China. And so being able to push back on that is important. It's easier if you have experience, expertise, but also information. And so getting information about how others have been dealing, the terms of their contracts. There have been some interesting examples where country A finds out that country B got a lower interest rate. Well, they're gonna push for that lower interest rate. So I think there's also an opportunity, in addition to just countries trying to bring more scrutiny to individual projects and to negotiate hard bilaterally, there's also this opportunity for some collective action. Imagine if there were a group of countries who are sharing with each other their experiences about what it's been like to participate in this, sharing, to the extent they can, information about some of these deals. I think collectively that would lead to some better outcomes than to doing all of this bilaterally behind closed doors.
Well, which is why the Chinese put those confidentiality clauses in the contracts in the first place. They probably don't want people to do that.
Exactly.
Just my guess there on that. Let's close our discussion the way that you kind of finished the book. And I'd like to I'm going to put two questions in one because I know our time is very limited here. You talk about that Belt and Road spending, even before COVID-19, was starting to tail off. So the days of $6 billion railroads in Kenya were probably going to come to an end with or without the economic crisis brought on by COVID-19. That being said, now that we're in the midst of a crisis, both in places like Africa and also even in China, where the economy has hit a wall to some extent, they may be a little bit more apprehensive about those big ticket spending items. So I'd like to get your sense as to what the world looks like post-COVID-19 in terms of the Belt and Road. And then very quickly, if you can tack on to that as well, that maybe the United States and the West, who's been criticizing China over the poor quality of construction and the roughshod way that sometimes these deals are done, if China actually slows down and is not investing as much because it's being pickier about the projects it chooses, the quality goes up. That might not actually bode too well for the U.S. and the European critics who are saying, this is crappy stuff. And at the end of the day, it actually turns out to be quite good. So looking forward, what are we seeing post-COVID-19 and in terms of quality?
So looking forward, I think we're going to see a smaller project pipeline, like you indicated, And as you mentioned, we had been seeing a decline in Belt and Road related activity even prior to the pandemic. That said, there's still all the a lot of the projects that have been announced in recent years. Many of them are still somewhere between an announcement and completion or cancellation. Right? They're in this middle phase, which is natural for projects that take several years usually. And the pandemic pressed pause on many of them. And so they're going to be, I think there's still the wave of projects that were announced, let's call it during peak Belt and Road in 2016, 2017. Those are still in the works. So that still is yet to unfold. And I think, so even if Belt and Road really were paused entirely, we'd still have that collection of activity, which is consequential. But the pandemic, I do think, is pushing another dimension of the Belt and Road to the front. It's also, by the way, going to, I think, require a lot of renegotiating of existing deals. And so that's probably a higher priority in the short to medium term is, a renegotiation of a lot of deals than a negotiation of new deals. But one of the dimensions that's really coming to the forefront here, and that I expect we'll see even more of, are the Belt and Road's digital dimensions. And digital infrastructure has been part of the Belt and Road since day one. Often, digital infrastructure is packaged with infrastructure that you might not think about as being digital. So, in the port of Piraeus, for example, in Greece, Huawei has redone the network there. And fiber optic lines are often laid alongside roads and rail projects when they're done. It's easier to do it at the same time. So there's been that activity there all along. But I think one of the reasons why we're going to see this become even more of a focus, a few reasons. One is because the borrowing potential of many of the participating countries is more limited. And while digital infrastructure projects are not cheap, they do tend to cost less than the big transport energy projects that really characterized the Belt and Road's first phase. And there's this incentive on the Chinese side to find new markets for their tech champions who are facing some headwinds, some increased scrutiny in Western markets, particularly in developed economies. And so I think the Belt and Road for those companies becomes a very convenient avenue and a necessity, frankly, in order for them to compensate for some of the losses that they're seeing elsewhere. And you mentioned what happens now in this world in which we have a smaller project pipeline. Does China have the opportunity to increase the quality of these projects? I think it definitely does. And this has been, frankly, quite a management challenge. And peak Belt and Road days, the number of projects that were being announced, I think, far exceeded the ability of the Chinese bureaucracy to do the quality control, to monitor them on the ground. Deferring often to state-owned enterprises to do a lot of the more technical work, and then not being able to monitor them. And so I think there's an opportunity there to increase the quality. And there is this, on the one hand, on the other hand, dimension to this, which you mentioned, which is, if China takes the advice of its critics, if it makes, environmental standards more important, if it makes social impact standards more important in these projects, if it makes debt sustainability more important, the Belt and Road is more likely to succeed. Or these projects are more likely to succeed. And could that ultimately be, something that comes back to haunt those same critics? And I think we have to be, the U.S. And others who've been skeptical of some of these projects, I think we have to be confident enough in our own abilities to welcome that competition. To say, we would prefer that the developing world in particular have projects that are commercially viable. That's actually a world we would prefer to live in, not one where projects are harming communities, harming the environment, saddling countries with debt. So I think think we should welcome that competition. And I hope that, a smaller project pipeline does lead to ultimately more viable projects.
The book is The Emperor's New Road, China and the Project of the Century. It's written by Jonathan Hillman, who's a senior fellow in the economics program and director of the Reconnecting Asia Project at the Center for Strategic and International Studies in Washington, D.C. Jonathan, thank you so much for taking the time and talking to us about the book. I can't recommend it enough. I'll put the links to Amazon for everybody to buy the Kindle version, the audio version, the hardback version. It comes in every way you want it. So, but I know you're on Twitter, and if people want to connect with you and follow what you're reading and writing and the work you're doing at CSIS, what's your handle that they can follow you?
So it's at Hillman, J-E.
I will go ahead and put a link to that in the show notes, again, as well as the Amazon link to The Emperor's New Road. Jonathan, thank you so much for taking the time to speak with us.
Thanks so much for having me.
Cobus, every year, 1 or 2 books comes out that just changes my whole thinking on a topic. And this is one of them. And I love it because he wrote it like a journalist. There's a lot of similarities to Howard French's Second Continent. In fact, he references French a couple times in the book. But again, it's this part travelogue, part geopolitics, political science, economics, and he mixes it all together in a very kind of easy to understand way. I'm not a big fan of the traditional academic book. I like these narratives. And when he's talking about his on-the-ground experiences in Central Asia, in Kenya, in Djibouti, it just adds so much texture and flavor, and it becomes more real. And that's one of the key things here for me. There are facts on the ground here. And every time I hear the rhetoric about the Belt and Road out of critics in Japan, the United States, and Europe, I get it. I don't disagree with anything that the critics say. But at the end of the day, there are ports and railroads and satellites and healthcare networks that are up and out the door and doing stuff. And I still have this big problem of trying to understand, what does the United States in particular stand for? The BRI is a complete mess. It's a Rorschach test. It's all of the things that Jonathan laid out in his book. But at least it's a vision of some kind, and that matters. People can rally around something. We have in the United States, for example, America First. I don't really know what that means. I don't think anybody really knows. That's a Rorschach test as well. Europe, I think for the most part, as a continent, the EU, does not have a foreign policy vision right now. Japan is in transition. Abe certainly did. In the absence of real bona fide competition, in many ways, the BRI is something, and that's important.
Yeah. That's the thing. I completely understand why, kind of American officials are alarmed at the BRI, and I completely understand they need to kind of push back against it. But if the vision that one is using to push back against it is simply that all of this Chinese infrastructure is bad, all of this Chinese internet networks are bad because Huawei might spy on you, then the next question, from places like Africa would be, so, what do you offer? And if the answer is simply, well, don't use Chinese stuff and then a period, then that's not good enough.
Well, as we heard this week, the United States has finally now come up with an answer to that question. Exactly that, where the United States Agency for International Development, together with the Development Finance Corporation and the U.S. Export-Import Bank, 3 government agencies, are now going to start providing governments with financing, presumably as an alternative to ZTE and Huawei. I wrote on Monday in our newsletter 3 reasons why this is going to fail and why it's dead on arrival immediately in a place like Africa. But at least they're coming up with some alternatives, poorly conceived, not very well strategized. Nonetheless, they are trying to come up with some kind of answer to that very question. But the fact is that the Americans have been coming up with supposed alternatives to the Belt and Road now for years. Remember the Blue Dot Network? Does anybody remember the Blue Dot Network? Do you remember the Blue Dot Network?
Actually, I don't, I have to admit.
The Blue Dot Network is supposedly this alternative of the BRI. And it's like the clean network that Pompeo, the U.S. Secretary of State, announced in terms of providing an alternative to Huawei networks. And they're trying to build all these things which are alternatives, but at the end of the day, from what I can see, it's more vaporware and marketing than it is actual substance. The fact that you in a think tank who studies China and the Global South and looking at U.S. foreign policy doesn't know what the Blue Dot Network is remarkable to me.
It's maybe just my personal failings.
It's not your failing. It is because this is a vaporware kind of project. And the same, I think, is going to meet the fate of this Huawei financing thing. I mean, it's so poorly conceived. It's embarrassing to watch sometimes when they come out with these ideas. And they're so excited. I watched this on the DFC event. This is the Development Finance Corporation. They had this online conference last week. And they're all talking to each other. And it shows you that in Washington, there's a gravity all their own that's unique to Washington. And it's one insider talking to another insider, and we're going to beat up and take on China. Yeah. And everybody's like, yeah, yes, great. Beat up China. And meanwhile, there are facts on the ground. And that's what I keep coming back to. And this book takes you to those. Now, he's a little more skeptical than I am. I don't think this is going to be that successful. I don't think it's going to reach Xi Jinping's glorious kind of, ambitions. But there are railroads and ports and satellites and all the things that I mentioned. That's something, and I think that's so important. Let's talk about Africa very quickly and the Belt and Road. The Belt and Road, encompasses now, I think, all of Africa, right? They swept up the whole continent, and I think in putting
roughly,
which makes, I don't know, zero sense to me why they would do that. Senegal is very excited that it's part of the Belt and Road. But most countries in Africa have not had any material benefit from being part of the Belt and Road. So I wonder if that undermines the long-term value proposition for China in terms of this policy, if they're talking it up. Everything's a BRI project, but at the end of the day, a country like Senegal doesn't have much to show for it. Is it just, at the end, just make people feel kind of like meh?
Well, this is the issue that I was pointing out at the beginning, is that that all of these Chinese projects in Africa precedes the coining of the Belt and Road, and have subsequently kind of been pulled into them into the Belt and Road retroactively. So Danny Madrid Morales, who's a media scholar who we interviewed before, he did really interesting research on the coverage of Belt and Road issues in Africa versus the coverage of China-Africa issues. And China-Africa issues gets a ton of coverage, and Belt and Road issues frequently don't get any coverage at all. So I think in a lot of ways, African populations, African media tends to focus on the Africa-China relationship, and Belt and Road becomes a kind of a side issue. I think among other reasons because Africa doesn't particularly have the kind of strategic, kind of fear around the Belt and Road that many other places have. It's not so close to China that it can easily be built into China's neighborhood, and it's also not doesn't have the kind of footprint in the world that the US has, that where it can feel threatened by the Belt and Road. So I think what I foresee actually is Africa essentially saying yes to everything. Kind of like yes, Belt and Road, yes, American counter Belt and Road initiative, fine, everything's fine. Like as long as there's more infrastructure, then great. I think that where the problem comes in though is financing and debt.
But it also might be because the journalists writing that story, just like you and I, don't really understand what the Belt and Road is, whereas China is a very precise phrasing, definition, target, language. We know what China is, right? We don't know what the BRI is, so let's just talk about China because it's synonymous with the BRI. That might play a factor into why there's less media coverage. There was something that Jonathan said in our discussion, and he made a very key point in the book, and any policymaker in Africa needs to read this book and be very, very worried about what he said. The project pipeline is slowing, not just because of COVID-19, but it slowed beforehand. And this goes to this question that you and I have been trying to look at in the post-COVID-19 era, what happens? And we've been forecasting that there's going to be a lot less Chinese money coming into Africa. They're going to be more selective. The projects they're going to do are going to be much smaller. The feasibility questions are going to be first and foremost now. So the days, again, of a $6 billion railroad going into, say, the Naivasha inland port in the Rift Valley, and then nowhere else after that, those are coming to an end. It won't happen anymore. What happens to African leaders who are desperate, as you pointed out, to get more infrastructure? Where's that financing going to come from if it's not going to come from China?
Oh, that's a very good question, and it's a very difficult one to answer. I don't think I necessarily have a kind of a clear answer to it. I think much of the thinking around what kind of infrastructure is crucial will probably have to change. Like I saw an African leader quoted recently. I forget who said that. That putting in ICT networks are now more important than putting in roads. It might be that African leaders start becoming a lot more picky about the particular projects that they really want to push. It might be that they find other forms of other ways of revenue, other forms of financing. As the continent integrates more economically, different kinds of financing might come up. All of these are possibilities. I think in the short term, I think this is going to cause pain in Africa. But I think the thing is that the continent's infrastructure financing models, the way that it interacted with the world to try and build more infrastructure, those have always been broken. World Bank infrastructure, Chinese funding, all of those have been problematic in different kinds of ways. So kind of Africa will need to move away from them anyway. There's no way that Africa can develop itself through just Chinese funded infrastructure. It's just impossible. So in the medium term, hopefully they will develop kind of more robust ways of funding things that they really feel they need. But I think the transition towards that is going to be hard.
I think it's going to be very difficult. In the Ghanaian presidential election, in the campaign that I've been following quite closely now in the run-up to the December vote, you're hearing the opposition parties talk about how they're going to borrow more, and because they need to build an infrastructure in order to generate the economic growth. This is the thinking in many ways that has got us into the problem that we are today, which is taking on massive loans without an economic plan underneath on how to repay those loans. Macky Sall, the president of Senegal, last week at the DFC event online, said something very similar, that where is the financing going to come from? He wants to raise more money for infrastructure, but Senegal has an economic base that is still largely maritime and agrarian. So that's not going to pay off billion-dollar loans for roads and for bridges and things like that. I suggest that David Ndii, the Kenyan economist, is where we should be thinking right now, much more in line with what he's saying. Ndii talks about how instead of investing in physical infrastructure, money now should be devoted to human capital, education, healthcare, strengthening the human capital. That is going to get a much bigger bang for the buck than buying a road or a railroad. Very different model here, but in the post-COVID era, you and I talked about on a recent show, things have got to become smaller. Microfinance, microgrids, human capital, investing in education, healthcare, all those types of things to better societies. I think that's where my 2 cents, where we should be going. Where do you think we should be going in the post-COVID-19 era?
Yes, I agree with you. I mean, it's because we're not only dealing with the recovery from COVID, we're also dealing with this kind of monster of climate change that's on its way, and is already affecting Africa in many kind of crucial ways. So I agree with you. I think human capital, development, education, that's really where there's going to be kind of massive investment needed. And I think if for countries that are pulling it off, because some African countries are pulling it off, they have a lot of quite a bright future, I think, in lots of ways. I think the issue is frequently. I think one of the reasons why it's a difficult thing to do is in lots of ways building a functioning road system is a lot simpler than building a functioning education system, because the thing is, education is dependent on people, and people retain trauma. Right. So Africa, one of the things that we don't talk about enough is that Africa is such a incredibly traumatized society, if one takes the continent as a whole as a society, which I think one can make the argument for, but then individual African societies are unbelievably traumatized, and trauma visits itself on education systems. It's difficult to have a functioning education system if teachers face, kind of retained trauma, and kids are facing fresh trauma every day. And I think this is this is one of Africa's biggest challenges. But if they pull it off, then the sky's the limit. And that is where I would like to see more investment.
These are the issues that we're breaking down, digesting, chewing up, spitting out, all the different metaphors that you want in our daily email newsletter. We write about this every single day in a daily column that Cobus and I put together. Cobus is on Tuesdays and Fridays. I do Monday, Wednesday, and Thursday. And what we're trying to do with these columns is to take some of the ideas like what we're doing at the end of the show and give people something to think about in the very quick, just a quick turn on the day's event. So on the day that the story ran about Huawei and the U.S. financing program, we had a perspective on it. And the whole point is to be able to give people something to think about and talk about and to frame it, not to persuade you or convince you of anything, but just to get those ideas moving on some of these issues that really don't get covered in most other mainstream publications. So that's what comes with our newsletter. It's super cheap, $7 a month for students, $15 a month for everybody else, students and teachers, by the way. And it's only $3 to try and sign up for 3 months. So we really want to make this accessible for everybody. Go to ChinaAfricaProject.com/subscribe. Let us know if you have any questions. You can email us directly, Eric, ERIC, at ChinaAfricaProject.com, or Cobus, COBUS, at ChinaAfricaProject.com. So that'll do it for this edition of the show. We'll be back again next week with another 2 episodes. We come out Tuesday and Fridays. Thank you so much for taking the time to listen to the program. For Cobus Van Staden, I'm Eric Olander. We'll see you again next week.
The discussion continues online. Head over to facebook.com/ChinaAfricaProject to share your thoughts on today's show. The guys are also on Twitter, where you can find Cobus at Stadinsky or Eric at E. Olander. And be sure to sign up for the weekly China in Africa email newsletter by going to www.ChinaAfricaProject.com.